All right, here we are with petty cash. This is chapter 7. We're going to learn just a couple journal entries related to setting up the petty cash fund and then recording the usage of that petty cash and then the replenish it, the petty cash fund. So 2 journal entries for this problem. And so we have on June 1st, Archer Spy Supplies. They create a petty cash fund with an impressed balance of $300. And so just briefly, an impress system of petty cash, it means the general ledger account, this new account that we're going to set up called petty cash, that new general ledger account of petty cash will remain the same balance. It will not change. So on the balance sheet, it will be listed in this particular problem for $300, and it will always stay as $300 on the balance sheet. So when we set up this petty cash fund in the first journal entry that we're going to do, that you can see even down below here, creating that fund, that's it for touching petty cash. For that account, petty cash, that's the only time you will debit to that account is to set it up with that $300 balance, okay? So it's going to stay, they kind of, some places will say it's remaining dormant. It will stay at that balance that we set it up for. And then if we have to change the balance, if we need to increase the balance, then we'll have a journal entry to touch petty cash. That's the only other time, or if we need to decrease, if we realize $300 is too much needed. So that's the only time we'll do journal entries to that account. The next journal entry that we record will be to record all the petty cash tickets. And that journal entry, you'll see that it will not, when we replenish the petty cash fund, you'll see that we're not debiting petty cash. We're not messing with that petty cash fund or crediting it. And so you'll see that shortly. So that is the impressed balance. That's what that means if you're wondering what that meant. And then our petty cash account, it's used as an in-office source for small, immediate type purchases. So like, stamps, maybe even donuts for the office or pizza. If they have to work late, you're going to just take money out of that little petty cash fund. It's usually a locked box or something like that. And there's at least there's one responsible designated employee in charge of that petty cash fund, and they're called the fund custodian. Okay, and then each time you take cash out of that petty cash fund, you're going to record a ticket saying what you use that, whatever the dollar amount is. Usually the ticket will be numbered. It will be signed by the person who's taking the money out, and then also signed by the person who's getting the money to use. So it's a documentation, and then it's put back into the fund, so that way that money that's missing, that cash that's missing, it's accounted for. And so in this problem, we can see during June, Pam, she's the fund custodian, she's going to she signed the following petty cash tickets. And so we have 5 tickets here listed, and then we have listed what the items were for, and then the dollar amounts for those tickets. And you can see I'm already getting ready that we're going to total up these tickets to figure out how many tickets were used. But let's keep continuing on just with the reading of this problem. And so we can see here on June 30th, prior to replenishment, the fund contains these tickets above, plus also they counted $90 of cash in it, okay? And then the accounts affected by petty cash payments are office supplies, travel expense, delivery expense, entertainment expense, and then merchandise inventory. So we can see they're either asset or expense accounts. So 2 asset accounts, office supplies, merchandise inventory, and then the others are expense accounts. So they already told us what the general ledger accounts are for each of these items, okay? And then on June 30th, how much cash should the petty cash fund hold before its replenishment? So if we're trying to answer this one, it's just getting us ready for the logic of what's going on when we do the next journal entry. So we'll answer that one right now. So if it had $300, and then these are all the tickets used, so that's the cash that should be missing. They want to know how much cash should be in it. All right, so let's see. So let's go 30 plus 20 plus 50 plus 40 plus 90. So we're looking at a total of our tickets for $230. Let's write that down. all right? And we said that the fund was established for $300, okay? So 300 minus 230, right? That should be, so this, you know, so I'll do it so you have it in the video, is $70, right? So the remaining cash in the fund should be $70. We have tickets for these dollar amounts. That's how much cash was taken out for these items. And we started with 300, so we should have these tickets, yep, and 70 bucks in the petty cash fund. All right. They told us that actually it has 90 bucks. Oh, so we must have shorted someone 20 bucks somewhere along the way. So in our journal entry, we'll account for that. But it should have had, before replenishment, 70 bucks. So let's put that there just as a reminder. So when we do the next journal entry, we know that it looks like we have an overage of 20 bucks. All right, should have been 70, but we counted 90. All right, so let's do the first journal entry. Begin by journalizing the creation of the fund. So we set up the fund on June 1st for $300. Let's shrink this so you can see everything. There you go. So we'll just do 6-1, but you can write out June 1st if you wanted. And we're setting up this new asset called petty cash, right? Debit balance, $300. That's what's going to be set up for. And we're writing a check. We're cutting a check for $300, getting the cash of $300 and putting it in that fund. So the custodian is doing that, getting it cashed and then putting that 300 bucks in the fund. And so we just shifted over out of cash account into this new asset account called petty cash, $300. All right, that's the journal entry. Not too bad. All right, now we need to record the replenishment of the fund. So that's when this totaling of the tickets and then figuring out how much cash we really should have, the 300 minus the 70. Let's just write that in there as a reminder. Minus the 230 gave us the 70. All right. All right, so let's do it. June 30th, they gave me my accounts, all my debit accounts. 2 were assets and the rest were expenses. So let's start writing those in here just to set up our journal entry. So we have office supplies, we have travel expenses. And then the last one was inventory. Perfect. All right, so those are all our debits. Those are all our tickets, our 5 tickets. So we can see office supplies was 30, 20 for the cab fare, which was travel expense, 50 for the delivery, 40 for entertainment, that was the business dinner, and then 90 for the merchandise inventory. So we're going to go ahead and record those, all those assets and expenses that we didn't record them yet. We just wrote tickets, and now we're at the end of the month looking at our tickets and saying, oh, okay, this is what we spent some of our petty cash on. So we need to record the journal entries related to the usage of that petty cash for these items, these costs, and then some assets. Okay, so there we go. We got all our debits in there. And then next we have is, well, how much cash, we want to figure out how much cash is needed to replenish the fund. So if we remembered, there was $90. They went and counted, I'm going to highlight this. They counted $90 actually in the fund. Should have been 20. So we have an overage. So don't worry, we'll do a journal line item for that overage. But now we have $90. And we're supposed to, when we have this petty cash fund, it's supposed to be at 300 bucks. So let's highlight that so you know where I'm at on this whole thing here. There you go. So we're supposed to have $300, and we went and we said, oh, there's $90 of cash in there. So plus all those tickets, but $90 of cash. So how much more cash do I need? Well, 300 minus 90. I need $210 of cash to bring that petty cash fund back to its balance, its impressed balance of $300. That little bucket or whatever, lockbox, whatever type of thing they have, drawer, whatever they have that has their petty cash held in. And so I need $210 of cash. So I'm going to cut a new check for $210. Pam is going to go to the bank, get $210 of cash and put it back in the fund. Now it's had $90, and then now she just added $210, so it's back at its $300 for July 1st. Okay? Well, our journal entry doesn't tie, right? Our journal entry is not having debits and credits equal. And we know we need to account for this overage. So we have 300 plus the 20 plus the 50 plus the 40 plus the 90, right? That's the 230. And we have a debit total for 230. We have a credit for 210, right? So we are over by $20. We need an additional credit for $20. So you could, some people will teach, well, they're like, oh, this is your plug. Yeah, so your balance, right? So your debits equal your credits. And then the plug is a new account. Then we're going to just categorize this. Let me scroll this up a little bit so you can see everything. And we're going to categorize everything into this new account called cash short and over. So you can call this your plug entry. A lot of people teach this way. But I want to talk about the concept. We're in balance now. Our debits and credits equal. So if you're good there on that, that's fine. This account, we want to keep track of our cash that's short and over, and that way we can, if it's really over by a lot and it starts becoming suspicious, then we're going to investigate it, especially with shortages. So, and with overage, you don't want to be over by a lot. You're cheating someone out on some cash. Somehow you messed up, and you don't want to mess up. You want to be exact. But so anyway, when it is a shortage, when you're short on the cash, think of that as, well, we're going to plug it to an expense. So if it's a cash shortage, it will have a debit balance. In our case, we already said they had $90 sitting in the fund, and I said it should have been $70 based off of the 300 tickets and the 300 balance and the 230 tickets, right? It should be $70, but we had 90. So we had an overage. So think of overage as like revenue, income. And so that's normal, that balance for cash overage will be a credit. And so that's why we have a credit for 20 bucks. But it's a combo account, shortage and overage. So it'll have debits and credits as we adjust. So if it was a shortage, you would have plugged for a debit, okay? But in this case, it was an overage, so that's why we have a credit, all right? So that is it for that concept for this problem, and I will see you in the next video for Bank Recs.